Well, good morning, traders and investors. Today is Thursday, September 17th, 2020. The month is more than halfway over. My name is Roger Scott. I'm the head trader for Wealth Press. Welcome to our morning before the market opens update. I'm going to talk about the number one sector, and I'm going to talk about the number one stock in that sector. And the overriding rhyme for today is, I told you so, because I've been calling for this sector to become number one and for the stock to become number one for quite a few months now. For about 2 months, I've been talking about it. So we're going to get into that today, and I'll show you some interesting things that are going on in the world. Today, we have a really important update, and in less than half an hour, we've got jobless claims coming out. The consensus is the 4-week moving average is right below a million at 970,000. Consensus is about 850,000. And we're looking for between 800 and 895,000. The truth of the matter is, any number below the 4-week moving average is positive. As long as that 4-week moving average keeps going down and down and down and down, we're good to go. That's coming out in about 23 minutes or so. I'm not expecting that number to have a major impact on the economy unless it's like 1.2 million, because the Fed had a lot of speaking to do yesterday, and that's what we're going to talk about right now. Global stocks, U.S. futures sank Thursday. The Dow's down about 200-something points before the open, after Federal Reserve indicated its benchmark interest rate will stay close to zero through 2023, but announced no additional stimulus plans. That's not good. Fed said Wednesday won't raise rates until inflation reaches 2%. That's insane, which the U.S. Central Bank's own projections say won't happen until 2023, and that's in the best case scenario. Chairman Powell promised Fed, "We will not lose sight of the unemployment Americans," but gave no indication of new stimulus. Well, that's great. You know, he's doing a lot of talking, but no actions. Thursday, Japan and British central banks left their interest rates unchanged, gave no signs of imminent stimuli. Global markets have recovered, but most of this year's loss is boosted by central banks' infusion of credit into struggling economies and hopes for a coronavirus vaccine. And AstraZeneca, I hope I'm pronouncing it, AZN, the ticker symbol, the reason they had to stop their testing, they were in stage 3, is because someone had spinal cord damage. That's right, spinal cord damage. But the stock didn't sell off, and it looks like they're going to restart their trials again. So maybe it was a pre-existing condition. I don't know all the details, but you would think, spinal cord injury, that's a pretty... I was thinking maybe the guy turned yellow or green or something, but he had spinal cord injury. That's bad. U.S. investors are counting on Congress for new support package after additional unemployment benefit that helped support consumer spending expired. But legislature, Dems and Republicans have been deadlocked. Fed forecasts the economy will shrink 3.7% this year, an improvement over its June outlook of 6.5% drop. Much, much better. The Fed projected unemployment rate at the end of the year to be at 7.6% instead of 9.3%. Thank God for small favors. Crude oil, it's not at $37, but it's still at $40. And the break-even price for U.S. frackers is about $41.5, $42.5. So that means U.S. frackers and crude oil in general is under pressure. Now, let's talk about something important. I've been talking about my 10 U.S. sectors. I know there's 11. There's the communication sector, but it's just the tech sector. And I've been talking for a while now. I've been showing you the 1 month, and I've been saying how things are changing. But now, if you look under the average, basic materials is now number one. Now, I've been talking about this now for about 2 months, probably about 7 to 9 weeks, about 2 months. And I told you guys that basic materials is going to start taking over. And consumer discretionary is now number 2. Materials is number 1. And I think industrial and consumer staples is going to come up to number 2 and number 3 spot as well, because consumer discretionary and tech tend to stay together, but materials, industrial, and consumer staples tend to stay together. Materials, industrial, usually you need materials for industrial, and then you have consumer staples, home furnishings, necessities, and so to speak. So basic materials is number 1. And folks, I've been seeing this coming for a while. If you don't believe me, just look at my videos going back a while. I talk about it every day, literally every day. And if you look on a 1 month basis, you've got materials and real estate, which kind of makes sense because Interest rates are going to be at very low levels for the next 2 years, maybe 3 years. And that means people are getting very busy refinancing their homes. Mortgage applications are on the rise. There's a lot of activity. When people buy or refinance homes, they usually put money into their homes, or they usually spend money. A lot of spending happens when people buy or refinance new homes. It's a statistical fact. It's not something I'm thinking about. That's why when you move into a new home, you start getting all those flyers. People buy a new car within X amount of months of buying a home usually. So it's a spending time. It's not a saving time. It's a spending time. And there's a lot of people on the sidelines who haven't taken a vacation in several months, who are refinanced their home, who have money, who are concerned with payments but took more money out of their home. So let's look at the strongest stock in the material sector. And again, I hate to say I told you so, but I brought this up many, many times. So if we go to the S&P 500, and these are the strongest stocks, FedEx. When did I tell you to buy FedEx? About 2 months ago, 2.5 months ago. And what about UPS? I hate to say I told you so, but I did. L Brands, Salesforce, AMD, Lowe's, these are all the stocks I've been talking about. So basic materials are in right now. FCX, it's the number 2 stock in the S&P 500. And if I want to go a little further, I would also look at Lowe's. But I would probably stick to FCX. Let's look at both of these. Let's look at FCX. Let's take a look here. FCX. Huh. This is free. This is interesting. This is Freeport FCX, but here it's giving me a different ticker symbol. Let's see if I could type it in. See what it'll give me. There we go. I'm putting in FXC. I'm losing my mind here. And it's not a far road. Woo, look at this thing. I like it. I like it. Look at this 50-day, 200-day moving average. This thing is trending strongly, but notice volatility is not rising. That's a very, very positive sign. It's moving higher very consistently without volatility moving higher. And when volatility is moving higher, that's a bad sign. The fact that volatility is not moving higher is a very positive sign. And that means the stock has more upside to go. And if we look at another stock, we will see D.H. Horton, Lowe's. Let's look at some of these. Lowe's pulling back, but it's still near all-time highs. I like these two stocks. I like these two stocks. Let's see if there's any others. How about DE? Let's look at D. Yeah, I've been bullish on these stocks for a while now. Oh yeah. Yeah. So there you go. You got your 3. You got FCX. You've got, let's go back to FCX. Look at that. I love it. You got Lowe's. We've been talking about these 3 stocks for a couple of months now. Look at that. Bounces back hard. And we've got Deere. These are all basic material. These are all stocks that thrive in that kind of environment. Industrial, like I said, industrial machinery, basic materials, that's where you want to be in right now. And FCX, I keep writing FXC, happens to be basic materials, and it happens to be the second stock. But again, usually when you have basic materials, and this is what I was talking about, typically when you have basic materials, you're going to see consumer staples, that's Lowe's. You're going to see industrial move higher to second and third place, and consumer discretionary technology move lower. And if you look on a 1-month basis, basic materials is number 1. And now if you look on a average, basic materials is number 1 as well. And all I'm going to say is, I told you so a while back, a couple of months ago. Now, I've got something important for you. Do you guys see how I analyze the market before the opening bell? Now, I don't trade pre-open. I'm waiting for the market to open, but I'm analyzing the market before the opening bell. And as I've mentioned the past few days, some of the most instrumental market activity happens before the opening bell. As you're seeing me work the market, analyzing the charts, look at the pre-open, I'm looking at everything. Obviously, I do a lot more than what I show in this video, but this will give you a taste of how much you can get out of the market before the opening bell. Now, markets are moving more than ever overnight, so it's important to analyze that data in the morning, or you're going to be flying blind. And if you know what to look for, if you know what specifically to look for, pre-market info can pinpoint the best setups that could make you thousands in profit, and at the same time reduce your risk. And that's the key, reduce your risk. So I teamed up with the world's #1 pre-market expert, Tom Busby, to unveil a new way of trading that's suited for this volatile, uncertain market. And it's allowing everyday folks and everyday traders to potentially earn, get this, not 5%, not 10%, not 20%, not 100%, 1,139.67% on their money. Can you afford to miss that, especially in this type of market environment? Obviously not. Follow the link below, get all the details, and get your next trade by clicking the link below. Do it now. Have a great day, everyone. And again, give me some feedback. Put something below this, the videos. Let me know if you enjoy them. Let me know if you want me to cover something else. Send me an email, support@marketgeeks.com. I want to hear from you, the good, the bad, and the ugly. And I'm going to leave the video with this for today. I hate to say it, but I told you so. Look at that basic material. Look at my videos from several weeks ago, and you will see I was talking about basic material leading. And I hope that helps.